So that's great. So hello, everybody. Thank you very much for joining another Property Thursday. Last week, we were down in London commuter belt. This week, straight up the M6, straight up to Manchester, and Reece and Sam. Sam, good to have you back. Third visit on the show. It's like the Graham Norton show.
I know, it's great, actually. It comes round, it's all straight in the calendar, get my glad rags on and make sure I'm part of it.
And you're currently on holiday, so thank you very much for breaking away from the family, from Gran Canaria, and joining us.
Oh, my pleasure, absolutely.
Reece, thanks very much for joining. And you've had a bit of a week this week, Reece. Congratulations.
Thank you. Yeah, from Monday. So yeah, appreciate it.
So 4 days on. Can we have a picture?
I think, is it on the
there?
Right.
Congratulations to you. Beautiful. Really, really good. So let's get on to today. And I know you've got a very, very good presentation for us. We're holding on. It's all about Victoria House. Don't get that wrong. But a little bit of background, Reece.
So I'm one of the managing partners for Global Residential, but today I thought it would be useful just to give a bit of an update on the UK property market and then go into the details of our new launch, Victoria House. So I'll skip past the photo of me, but before I do, in terms of Global Residential, we are one of the sourcing partners on behalf of Holborn Property, and I think that really fits down into 3 categories. So I'm based in Dubai, but we as a company have 3 investment analysts in the UK who through research look to identify the best areas for growth, be that capital appreciation or rental returns. Once we've identified these particular developments, we then secure a relationship with our exclusive partners. Fortunately today, Salboy being one of them. I've personally worked with Salboy for the past 5 years. Again, with their track record, this is everything that we want to make sure we get right for clients. So we then secure exclusive positions. Then finally, we do offer a full end-to-end service complementing Holborn Property, looking at recommended solicitors. We have in-house expat mortgage advice, so we can secure overseas finance. A big part of the business that we built out towards the back end of last year was the lettings and management service. So global lettings and management, a real kind of spend on marketing, headcount, just to secure and make sure that the service for clients from start to finish is smooth and seamless. So that's Global Residential. Why property? Bring it back to basics. Again, as I mentioned, we can look at areas that anticipate high growth in terms of capital appreciation and focus on rental returns. Today, looking at Salboy and Victoria House, I most certainly think with the regeneration and infrastructure improvements in the area, that would very much be focused towards the capital appreciation side. Given that it is a tangible asset, banks do like to lend on it, and I think that is probably property's biggest benefit against any other investment available to retail clients. And then finally, given that it is an illiquid asset, a lot of clients are a little bit skeptical to say, well, actually, I can't get in and can't get out. I think coming off the back of a pandemic, that most certainly has helped give property a true representation and create confidence in that sector. So for me, those are the 3 points on why clients should consider property to be part of their portfolio. So a quick update on where the UK is and how house price performance has performed last year. On average, UK house prices saw more than £24,500 of an increase last year. And now, according to the Office of National Statistics, that was over 10% up to the date of November 2021. So again, real strong house price growth. For me, I really wanted to kind of cover off as to why we are seeing that growth. It really comes down to the fundamental factors of extremely low supply, high demand, and having that imbalance fundamentally continues to perform in uncertain periods. Pair that with low interest rates, making it more attractive for foreign direct investment into the UK, and for owner occupiers in the UK, having the ability to get mortgage finance, again, has stimulated the growth. But a big part for me as well is looking at inflation. I'll touch on where the UK is right now, but even if you're looking at the US, looking at 6.5%, 7%, possibly even 7%, 7.5%. If your cash is left in the bank, again, we need to be looking at assets that are really going to be either a hedge against inflation or outperform that figure. So going back to the supply and demand imbalance, the government has a target to reach over 300,000 units, and that was set to try and be achieved by the mid-20s. Again, that has actually been revised up to 340,000 homes per annum. But to the left, you can see the actual supply that was coming to the market in green. And since 2006, we've seen a shortfall of around about 100,000 units, where 2018/19, we gradually saw an increase up to 244,000. But coming back to the pandemic, imports really slowing up, and the effects that COVID really had on the housing market, as of last year, 2021, that has dropped down now to 187,000. So again, a really undersupplied market. To support that furthermore, looking at Zoopla's research report, this is comparing 2021 to 2020. The demand is up 15.7%, as well as sales, just over 12.7%. However, new supply coming to the market in the UK on average is down 9.5%. And the stock available for sale is down just shy of 35%. So now coming into inflation, the UK, as of December last year, had a consumer price index of 5.1. However, property tends to keep up or even outpace inflation. Now, what's more beneficial for clients looking to leverage is that inflation actually helps erode the value of your debt/mortgage over time. Just to go in really simple layman's terms as to what inflation is, for me, it's basically the purchasing power. So the purchasing power is the amount of goods that can be purchased with that single unit of currency. Now, this is inflation dating back to 1751. Again, showing you how valuable your £100 would be if it was simply left in the bank, virtually zero in today's terms. But making that more relatable, if we were looking at £100 in 2011 left in the bank, in your bank account, fast forward to 2021, you'd still have your £100 sat in the bank, but that would give you the buying power of £69 in today's value. However, in that same period of time, the average property price in the UK has seen an increase of 63% on average. So essentially, you're looking at a 32% gain on inflation if you was to buy the average property price index. This is one of my favorite quotes, and I think it, again, makes it really relatable if you're looking in the right areas for capital appreciation. But the power of leverage creates significant gains. Property has made more millionaires and billionaires than all other assets combined. Now, effectively, purchasing through a mortgage is where the tenant will be paying for that plan all the way through that mortgage term. And to make it even more relatable, if you're thinking of some of the largest corporations in the world, for instance, McDonald's, Golden Arches, a lot of people might assume they are just a fast food chain. However, their business model is really wrapped around real estate assets. If you think of Dubai next to the Burj Khalifa, in Egypt next to the pyramids, you will find a McDonald's. Now, they would be sold or rented out to a franchise, where the franchise would pay for that real estate asset, meaning that McDonald's have a global portfolio in excess of £30 billion. And that's really their core strength. So to simplify a leverage gain and what that would look like, if you were looking at, let's say, for instance, a £200,000 apartment or house, and you applied a 75% mortgage, just for the purpose of this exercise to keep the numbers simple. So £50,000 invested. And over that 10-year period, let's just assume a low conservative growth rate of 5%. Now, again, your tenant paying for your mortgage costs, so you'll break even each month. Year 10, the property has a value of £300,000, meaning that if you was to sell pre-tax, you're looking at £100,000 profit, which is tripling your cash in a low-risk market. Now, taking this one step further, again, looking at inflation and how that erodes away your debt, fast forward 10 years, you now have a property that is valued at £300,000. but you still have the same mortgage as when you took it out 10 years ago, so £150,000, meaning your loan to ratio has fallen from 75% down to 50%. And going back to the previous figures, looking at 31% consumer price index, this is, again, having the benefit of locking in a rate at a certain point in time. So to give you a prime example, if we were looking at the average property price in the UK in 1980, you're looking at £20,268. Fast forward to today, 2022, the average property price in the UK is over £275,000. To the left, you've got the average house price increase, but now adjusting that to inflation, you can see the peak in 2007, the financial crash. So we're still below the peaks of 2007 in terms of inflation. However, we are seeing a consistent year-on-year growth on property prices. But back then in 1980, the average mortgage was around about £15,000. If you're able to get a mortgage for £15,000 today, it wouldn't seem scary, but that's simply because inflation has incurred and you are getting the purchasing power erode away your value of cash. So with that said, again, now we're looking to try and identify the best in class and look for the areas that we anticipate the strongest growth. Again, I've used a simple Zoopla house price index because I think it really shows quite clearly where the best regions are for capital appreciation. Looking to the left, Liverpool, Manchester, Nottingham are the top three, but for the last 5 or 6 years, Manchester has been bouncing around the first and second place. To the right, you have the average purchase price, which for me, looking at affordability on house prices, really will stimulate or we can identify where this is going to be or where we can get the growth in the medium to long term. So Manchester, just shy of £200,000 for your average home in Manchester. If you drop down to the bottom or second to bottom, you have London at just over £500,000. Again, for your average or young working professional, looking at a property of over £500,000 in the capital is becoming unaffordable. So we've got to look for areas that are mature, but again, in the medium to long term, can see that uplift in property price.
Reece, the questions come in whilst we're talking. I'll give you a break.
Sure.
Some great slides there. And just to let people know that this has been or is being recorded and you will be able to get the recording. And I'm sure, Reece, if somebody actually wanted to see and get the slides, you could actually give them to them as well. There's some very, very good information there. So please, everybody, there is a Q&A tab at the bottom. I always forget to ask any questions you like as we're going along. So rather than wait till the end. Sorry, Reece, I just thought I'd give you a breather and a glass of water.
No worries, thank you. And for all of these details and all of the research that we provide for clients, we can share that as well. So the home track reports, etc. Going back onto Manchester property, key highlights for us, again, looking at regeneration programs, what's coming into the city. But just a quick look at some of the articles from, and this one's actually from the Times, everyone under 30 is moving to Manchester. Now, this article was written about a young couple who were freelancers working in the tech sector. They were looking at, again, an apartment in central London at just over £600,000, which they ideally wanted to move into. But because of the nature of their job, they looked around regional cities and they were able to secure a prime high floor 1-bedroom apartment at £360,000. Now, the article goes down to basically share their comments on the quality of life. With this apartment in the city centre, they've got state-of-the-art facilities, swimming pool, again, everything that you would expect as a young working professional. Now, just to kind of caveat that, looking at the larger corporations, as of last year, there are 85 FTSE 100 companies present in Manchester, which has been uplifted from 62 in 2018. So again, retaining postgraduates and making it a real livable place for your ideal potential tenant. Media City has £1 billion pledged by the government to double its size. Again, another area that we've seen a huge amount of growth in the city. And Manchester was named the third best city to live in the world. Again, that's quite questionable, but people living there, I'm sure, will vouch for it. But a real kind of cool, vibrant, quirky place. Looking at the stats in terms of a forecast from Savills Q4 report, they project a 24.1% growth rate on property prices in Manchester for the next 5 years. So for me, if I am looking at, let's say, taking a 70% mortgage, putting 30% equity in, if we can get these types of growth rates conservatively, again, we really can show clients a significant return on their cash. Looking at the rental side, now this was an article taken from Urban Bubble, their Q3 2021 report. They've claimed that residential development is nearing 100% occupancy. As of last September 2021, only 427 houses were available, or apartments were available to rent in the city. Now that's a decrease of, well, it's down 79% below 2020. Looking at a rental trend from November 2016, again, kind of stable, constant growth. However, looking towards the back of August last year, we've seen a real spike for across the board 1, 2, and 3 beds, predominantly in the 2 and 3 bedroom apartments, simply because renters are looking for larger, better space to live in, having this working from home scenario, actually enjoying where they live and having the ability to work from home has really kind of represented a spike for larger, better quality of space. So with that said, before I do go into the project, I'm going to pass over to Sam Phillip to talk about Sowboy. Again, these are an outfit that we've worked with for the last 4 to 5 years, and Sam will go into a couple of their developments.
Morning, everyone, or afternoon, wherever you may be. Yeah, I'll just touch on a couple of bits about Sowboy and who we are and what we do. Look, the best way to describe us is we develop, we fund, and we build homes all the way through the United Kingdom. We're predominantly based in Manchester, but we operate all over the UK. And look, the biggest part of our group is the people that it's led by. So you've got Simon Ismail and Fred Doan. Anybody that was on the 55 webinar that Chris was alluding to earlier on, Fred's obviously one of the wealthiest men in the UK. His personal wealth is worth about £3 or £4 billion, and Betfred is the example of that. So our group's made up of 3 parts: Sowboy Build Partner, Domus Construction, and Sowboy itself. We're a developer contractor, so what makes us very, very different and unique to everyone else is the fact we are self-funded, and we build our own stock through Domus Construction, and we have an exit strategy through Sowboy, who is the developer, but also our key partners. So obviously the only reason I'm sitting in front of you today at Holborn is because of my relationship with Global Residential and Reece. But just touching on the left-hand side of that, the Sowboy Build Partner, we lend around about £400 or £500 billion out at the moment to developers all around the UK. Some are competitors in Manchester, some are based in Cornwall, up in Aberdeen, wherever it may be. So what we would do is we would help support and fund developers in their region. Maybe not a region that Domus can contract in, purely based on geographical reasons. However, if you're a local developer and you want to build 8, 10 houses, we would obviously step in and provide the funding for that. So there's quite a lot of strings to our bow. Track record second to none. In the last 18 months, and this is through a pandemic as well, we've delivered over 2,500 homes. We're really proud of that. And the big 6 developments that Reece is going to allude to just now, a couple you might be familiar with. You've got Blackfriars, which is at Eastern City. You've got Burlington Square, Tib Street in the centre, and obviously Local Crescent there as well. And the big thing for us is the deliverability. As I say, this is our 3rd project with Holborn. I know you guys did very well on Blackfriars and 55 respectively, which is now obviously come away from the investor side, because our main focus throughout is end users and owner occupiers. So you guys are getting into projects as early as possible to have the pick of the units almost. And then what we do is we sell to the open market. Now we hold quite a few units back for them because that's what we're trying to do. But where that helps is with your valuations at the end, our deliverability and knowing that the thing's actually going to get built.
And of course, Sam, very, very important when it comes to mortgages.
Massively, and Chris, that I'm so glad you picked up on that, because that's a big thing for us, and we're very proud that we've had a couple of issues in terms of local people and more on affordability, but in terms of foreign investment and people investing into our schemes, we're proud to say none of our developments have been blacklisted as such. The reason that is, or what we feel the reason that is because we're very careful of who promotes our product. Obviously, it's coming to you guys, which is direct to your database and your clients, along with other property companies that we don't allow advertising. So if you Google Victoria House, for instance, the only two things that come up is Salboy International and also our Hong Kong and China offices. So it's because it's such a direct product. And we like to say that we're a bit more niche as well. And with doing that, from the funding aspect and the mortgages, we seem to have hit a winner so far in terms of not having any issues with local solicitors.
I got to say, from the Holborn point of view, obviously we do our due diligence on the projects and the funding, and mortgages is a big part of that. And we do offer the service to actually go through somebody's mortgageability prior to them, going further down the road, just to give them that peace of mind that it's going to work out for them. So that is worth noting.
That's everything though as well. You can get obviously decisions in principle, these sort of things from you guys, and what it does is, one, for the consultant, has that peace of mind knowing that the thing's going to actually get built, but more importantly from the client going, right, well, in 18 months time or 2 years time or however long it is, it makes such a difference for that peace of mind. What
I would mention as well is some of these projects aren't small developments. For instance, the Crescent, you've got 399 units, if I'm correct, in that project. But the finishing I'll show you shortly. To give you an idea in terms of Manchester's population, you've currently got a population of 2.7 million in the city centre, just over 500,000, but that's growing. Over the last 3 years, we've seen an average of 20,000 people coming to the city. But going back to the Crescent as an example, because I think that's the largest and the biggest feather in the cap of Salboy, they're all fully occupied. And if you can give a bit of an example as to the demand and the rental figures that were achieved for the Crescent, because that was the most recent project.
Yeah, no, absolutely. And look, because we're a developer contractor and finance background, we always err on the side of caution. We would always under promise and over deliver, and no more than the Crescent has that happened. In terms of, we quoted one bedrooms between 850 and 900. Now this is something outside the city centre. It's actually in Salford, so it's 5-star hotel luxury living, as Reece is showing you there. And we said 850 to 950 for one bedrooms, and we were a bit ballsy about that at the time. But you're now looking, there was one on the market last week and it was £1,250 for a one bedroom. Bearing in mind the development only completed 18 months ago. So that growth and that schedule of rents that Reece showed you earlier on in the presentation with the slides, it's something that just shows you local people in Manchester, unless you're in the financial services industry or you're in the sporting industry or media or anything like that, not a lot of people can afford to buy. So naturally they're pushed towards the renting side of things. And these high amenity properties, with the working from home, with being able to socialise and entertain as well, with gyms and things, it makes such a difference, because not a lot of people want to leave, and it's very easy to get a tenant in Manchester, but it's hard to keep one.
I think another point, just talking on the first project that we worked with, this wasn't actually part of the Blackfriars development, but it is a refurbished pub. But if you can give a bit of an explanation as to the money invested by Salboy to again do better by the city, and this as a prime example with the Blackfriars pub.
Yeah, so Blackfriars was our first project that put us on the map, and again, you guys at Holborn will be familiar from it. That's 383 apartments over 2 stories. Now, in the middle of it, it was very, very unique. There was one of the oldest pubs in Manchester, Grade 2 listed building, which means you couldn't knock it down in the city. So what we'd done is we'd, just before the pandemic had started, signed a contract with one of the top chefs in Manchester, About 2 weeks later, the pandemic happened, and he decided to retract his contract. So that left us in a little bit of a sticky situation. Now, us being a self-funded developer and very, very cash rich, we decided to bring it into the group in terms of Domus, the F&B, the food and beverage inside. So we spent £950,000 on this pub to get it ready for the chef that was going to take it. Then we walked in and said, no, it's not good enough. And then spent another £600,000. So we spent over £1.5 million on this pub. It's about 85 covers. It's private dining. It's kind of a nod to the old classics. And remember, as I say, with 55, we just opened it at the time, and Chris was talking about it then. And it's been brilliant. It's this kind of Soho house vibe is what we've gone for. We've taken the best parts throughout the world and the UK as well, and decided to bring it to Manchester. And touching on Manchester, I know Reece said there was 86 of the top FTSE 100 companies. Taking it away from that side of things, you look at your big restaurants, your Ivies, Sexy Fish are about to open. They've got one in London, one in Miami. They're bringing their third one to Manchester. The whole city has been galvanised, and it really is one of the places to be at the moment, and we like to bring that through. And obviously the last slide that Reece has just brought, we're getting a bit of recognition as well. The local Crescent development that you saw, we won the Bespoke and Urban Developer of the Year for it, so we're very, very proud to win that last year.
Sam, a question's come up. Thanks, Joanne. Can expat non-UK nationals apply for a mortgage in the UK? And the answer is yes, subject to status. And we've got Darren Crocker on, actually, to everyone. But yes, Darren.Crocker at Holborn Assets, etc. You can get hold of him through me or through Reece or through anybody and go through that. So the answer is yes.
Yeah, absolutely. Absolutely.
Sorry, I just put that advert in.
Oh, no, of course. No. More than happy.
So with the track record of Salboy and what you've delivered, again, for us, working very closely with you, looking at new sites, very proud to introduce Victoria House, brand new launch. But for us and Salboy specifically, looking at the location for clients to make money was key. Predominantly, I'll show you a map shortly. It's been more towards the east side of the city, towards Salford. However, this is prime, smack bang in the middle of the city centre. So you have Victoria House to the right, just off of Portugal Street East regeneration programme. But as you can clearly see, it's literally a 30-second walk to Manchester Piccadilly train station, which is part of the National Rail right now. But looking on infrastructure improvements, when HS2 comes online, this will be the train stop. So right in the heart of a great location. And adding to that, which I will cover off quickly now, is Mayfield Park, which may not seem that significant, but for me, really understanding kind of market sentiment and what tenants really want living in a particular area, this is most certainly it. It's Manchester's first park in over 100 years. Now, that might not seem like much, but it's a 12-year master plan, and that will include both private and government spend. This is a regeneration program that is currently underway. So this is a recent drone image. To the left, you have Manchester Piccadilly, but this is the site. Now, what is more important, because Victoria House is off plan due to complete in Q2 of 2024, there are, at the time of completion, so autumn of Q4, there will be 2 Grade A commercial buildings, over 1.6 million square foot of office space and retail, etc., on the ground floor. But again, thinking on the profile of young working professionals, attracting, again, that right demographic into the city, for us looking at areas that are going under regeneration, that's huge for us. So I think it's probably better, Sam, for you to give a quick indication on where the project is in relation to Ancoats, etc.
Yeah, of course. Yeah, no problems. Thanks for that, Reece. Yeah, look, Mayfield Park, massive. Just touching on it from there. Look, that is massive for the city, and with it all being, the whole city's connecting now. Everything is within a 15-minute walking distance, as you'll see from this image. Now, obviously to the left of the picture, the key place is Spinningfields. Spinningfields is the CBD. That's one of the coolest and trendiest parts. That's where all your nice restaurants are and everything from there. where to the right hand side, next to Victoria House, is Piccadilly Station. Now, geographically, that might look like a long way. It's literally a 10-minute walk, if that. And again, Manchester as a city centre isn't that big. Obviously, I'm comparing that to London. So everything's gettable very, very quickly. Next to where Victoria House is, you'll see there's two areas. There's one called Ancoats and there's one called New Islington. Those are the Shoreditch type areas and the northern quarter. Those are the kind of Shoreditch types where there's a lot of young professionals moving there. There's a lot of nice places to go. It's very much the up and coming place. And look, the biggest you'll see it to the bottom left-hand side of the photo. The biggest watershed moment for Manchester, guys, more than anything, was when the BBC moved up. When the BBC and ITV moved up to Salford Quays, that put Manchester massively on the map. And obviously, this has gone on earlier about the FTSE 100 companies now. So what used to happen in Manchester was somebody would come, they'd get educated, and then they'd go to London, they'd go to Europe, they'd go to the Middle East, whatever it is, because that's where the work was. That's now not the case. People are staying there, and that's why the growth in the city has been massive. Victoria House.
Sorry, Sam, you've got a remarkable mayor there in Manchester as well, haven't you? That's often on the news and often quoted. And he's the driver, am I right in saying? I'm sure you know him.
Look, Andy Burnham, yeah, look, he's a massive part of it. I genuinely think he will be the next Labour PM. If not the next, the one that follows, shall we say. He's making massive moves. He doesn't take no for an answer. And look, he articulates the city very, very well, is something I would say. And he believes in it. And look, I've been in Manchester for 10 years now. I'm from Edinburgh originally. I have such an affiliation to the city that you see the growth, and see being there and being part of it is massive, because the amount of skyscrapers in the skyline now, not just that, it's the football, it's the music, it's the entertainment, it's all these things that young professionals love, and that's why people want to move to the city. And it's, I don't know, I'm very passionate about it. I'm very passionate about the city. We've worked with you guys on the last 3 projects, and you've seen the growth, and I mean that in terms of price as well, more than anything. Now, where Victoria House is a bit of a feather in the cap, because as Reece said, we tend to be at the other side of the city, but we couldn't say no to this because of what was happening and where it is.
Yeah, I think location is absolutely spot on. So to go on to the actual development itself, I think this is quite a useful computer-generated image to give an indication as to where Manchester Piccadilly would be. But in total, there are 177 1-, 2- and 3-bedroom apartments. Now, for anyone thinking that is quite large in size, comparing it to the Crescent and Blackfriars, it's just shy of half of the actual build that these guys have previously been successful on building. But to the left, you do also have a new, already award-winning hotel called the Leonardo Hotel. It's kind of a Jenga-style hotel, but again, already in construction. So you can see what is happening to this part of the city. Again, another real kind of nice image of what tenants and investors can expect to see in terms of the views back down towards the city. To give a quick snapshot on the floor plans, if you are looking for that view that was on the previous slide, the 2 or the 3 bottom units, so floor plans type 102, 204 and 103 will be looking back down towards Manchester City. Or if you're looking for a kind of greener area looking up towards Ancoats and New Islington, you'd look north on these floor plans. To the right, as I mentioned, Hotel Leonardo, which has already won awards and it's not even been built. A quick snapshot on the pricing and the availability that we have. So fortunately, we've got access to all of the even floors, so 2, 4, 6, 8, etc. The development will go up to, I think, is it 24 or 25?
24 stories.
24 stories.
Yeah. Penthouses aren't for sale at the moment. Sorry.
So we've got a starting price from £191,000. Again, really kind of looking at close comparables, and to get a true indication on the pricing, that is simply looking at the pricing per square foot. So the purchase price divided by the size of the apartment. Looking at close comparables, using Oxygen as an example, which was built and now complete by Alliance, you're looking north of £600 a square foot. So very competitive. Again, thinking in line of when this project does complete, Q2 of 2024, we most certainly bang on the money in terms of the pricing. What we have done is we've put a blanket yield of gross 5%. Now, that is very conservative because, again, working with Salebury, we want to underpromise and over-deliver. And more importantly, like Chris mentioned, with clients looking to get mortgage finance, we want to make sure that we can work out via a cash flow, the calculations to work at a conservative figure. But we most certainly anticipate that these rents are going to be a lot stronger than they suggest to the right. Quick snapshot on some of the internal images and what's to be expected. A very Salebury-esque type modern apartment style. Now, they will come with full white goods. So if you can imagine this image turning upside down, everything that stays is included, be that your fridge, freezer, cooker, etc. We do have furniture packs available. So again, if that's something that you'd like to include to increase rents, we can provide them as well. A big key point in terms of the facilities and amenities, on the second floor, there is a private residence roof garden, reflecting back on what was a good success with the Blackfriars. Getting tenants to, again, kind of integrate and really create that community vibe will create longer term tenants.
Just touching on that, sorry, very quickly, Reece. Obviously, there's 2 commercial units at the bottom of the building, and what we've decided to do is everything going forward will be under, so it'll be similar to the local Blackfriar and similar to Viaducts and other projects, whereas it will be our bar and restaurant in there specifically for the residents, and also some open for the public. But it's us that keeps that. It's not a case of we just put anyone in there.
These questions come in about the process. What's the deposit? How do they get it all going? Can you just touch on that quickly? Or maybe it's a slide coming up, but just questions just been asked.
Yeah, I'll fire it in. I've got 2 more slides just in terms of the facilities and amenities. So again, state-of-the-art gym, something that's been a huge success, and with everyone trying to be fit and healthy. Again, real kind of state-of-the-art gyms to be included. So now back onto the questions and answers. The process is a £5,000 reservation fee that will secure you a unit. Once we are in receipt of that, we will then instruct solicitors, where there will be a 25% down payment, less your £5,000. Nothing will be required until completion, but for kind of finer details on a cash flow scenario, I can go through on a cash flow, or please speak to your consultant.
Yeah, I mean, I've got to just enforce that. Lots of wealth managers out there. We've got some clients on here as well, so do go back to your wealth manager or get back to us, and then we can provide all the information. As I say, there will be a recording. So is that something I could put some money on then, Sam, that Andy Burnham is going to be the next Prime Minister after?
It's my personal thought, shall we say, Chris?
You can't bet in Dubai, but if I could, I'd be on the phone now off that top tip.
Yeah,
Andy Burnham will follow Boris.
I think he will be. No. I think he will follow, or he'll be the next Labour leader, shall we say. Whether or not he makes it as PM, that's something very different. But yeah, he's a cracking guy as well. He's literally down to earth, and you can have a normal conversation. Whereas sometimes maybe looking at Boris, it's something that you might not be able to get close to.
It's a great looking scheme, and I tell you what, a story you told us last time, and I really enjoyed it, was your venture down into Cornwall. And for those people that I just think it was a fascinating tale.
Yeah, no, absolutely. So as I say, we're predominantly based in Manchester, and we're looking at 2 other locations now: Central London, and we've bought quite a bit down in Zone 1 in Kensington and Chelsea, and Cornwall. So anyone that's familiar with Cornwall, the Bristol Hotel, which is the most prominent hotel on the front, and we purchased that end of last year, I think it was, and obviously that will continue to run as a hotel. But we're looking at big plans right for the front of Cornwall. We want to build something similar to what we've built in Manchester, in terms of a bit of a dynasty, a bit of a lot back to, and a nod back to the local area, and just rejuvenate it to where we feel it should be. So over the next 5 to 7 years, we're going to be down there. And we're also looking at St Ives as well, because as I said, part of the Salboy build partner, we have lent money to Cornwall for the last 10 years, 8 to 10 years. And then we thought, well, why don't we come down there and see where it is? Because I think with everything that's happened in the pandemic, albeit I'm away on holiday at the moment, you guys are obviously in the Middle East. I still think there's going to be that kind of staycation side of things, and with global warming, with absolutely everything, it's very, very easy to fly a private jet or a helicopter into Cornwall, just as easy as it is into the north of France as well. So,
well, that's good, because I have my own private jet and a helicopter. So
oh,
I'll
we
be
know,
straight
Chris.
over there.
We know. Don't
Yeah,
you worry.
you'll be.
We know.
You've only
We
gone
know.
down there because you want to have somewhere to go when it's when the sun's not shining in Manchester. But I know the
No
sun's
comment.
always shining in Manchester. That's great. Thank you, guys. Really enjoyed that. Sam, as always. And Reese, I'm not going to call you Reese anymore. I'm going to call you Stato. There was a lot of figures in there. So everybody, again, I'll repeat it. The recording will be on holbornassetsproperty.com. All you do is go to the area and you can drop down and see this and other live broadcasts from around the world. Reese, you can go back and change nappies now.
Thank you. Appreciate
Thank
it.
you. I've got one other thing. I've got to do. This is really important for those people in Dubai, the wealth managers in Dubai. Please get your clients on board, and I'll see you at the horse race next week, next Thursday, 9 o'clock. Bit of horse racing, a bit of food, and a bit of company. So I promised I'd put that in. Sam, thanks very much. Reese, I think you forgot to congratulate me on my award, but I'll do it for myself. Thank you very much.
Another one. Another one.
No,
another award.
Well, you know, I got another one. So thank you, everybody. Enjoy Gran Canaria, and thanks for taking time out, Sam. Really enjoyed that. Oh, questions come in. Hang on, let me just see if we haven't covered it. Let me just see. Oh, no, we've done that one. Sorry. Thank you, everybody. Speak to you later.
Cheers, Chris.
Reese.
Cheers, Chris.
Thank you. Bye.
Thanks, Reese. Bye.